recently the stock market has been quite volatile, and I mean, I'm not saying I love it because obviously volatility is kind of intimidating, but at the same time, it's, I guess, great because there's so many, or there's more buying opportunities, which, I mean, I've been deploying some capital these last few weeks. I guess how long has it actually been? Like 2 weeks into the market. Yeah, obviously there's a lot of uncertainty and that breeds volatility, and we could definitely see more downside movement, but also, again, just because things might go down doesn't necessarily mean it's a bad time to buy. And I mean, again, this isn't financial advice or anything like that. I'm just chatting about kind of my, I guess, interpretation on what the market's doing and how I'm kind of reacting to it. And I guess in a sense being somewhat proactive as, or kind of not anticipating moves, but I have the capital ready and I have some stocks, and when they hit their certain prices, it's kind of like, okay, here we go. Like this is time to go deploy the money. And it's also with the understanding that, again, things could go a lot farther down, but we don't know. But also, I don't want to miss opportunities in stocks that I want to buy, or I guess ETFs, because things could go right back up, kind of even like we saw the other day, like great, like this SCHD, it's one of the ETFs. Actually, let's just go to the SPY. That probably makes the most sense. It's like the same thing, but the SPY dropped, what is this, 20% in like a month, and then on one day it is up essentially 11%. Actually, was it actually that high? Yeah, that's insane. Actually, what did SCHD do that day? I mean, essentially, like, yeah, that's crazy. Crazy moves. Actually, on like a big timer, I don't want to do too much technical analysis, but then we have this like huge grind line here. I haven't really been looking too much at the technicals, but that's not a that is not a coincidence that dropped to this level, because that's the previous high over here, and coincides with this grind line that I thought was kind of significant. I haven't drawn these lines. These have been here for a long time. But yeah. Anyway, been buying some stuff these last few, I guess, 2 weeks. I think, again, these are not buying recommendations. These are just things that I've been buying. I bought some more applied materials. I'm actually deep in the hole in this one. I'm at 170, so I mean we're down like almost 20%. I kind of wish I waited a little bit, but obviously I didn't know. But yeah, these prices seem like okay too. I think the dividend, yeah, like below 140, I think we got a lot of activity, at least in the last 5 years. 140 seems to be like an okay price, and can I detach this? Oh man, hold on, let me get the calculator back. Can I detach? Why so small? Really? Can you make it bigger? Whatever. And what's the dividend? So yeah, they just raised it to times 4 divided by, let's just say, 140. 1.3. I mean, that's not a big dividend at all, but at the same time, like, it depends on they're raising it quite rapidly. They can support it with the free cash flow, and they have like no debt, and I like the market they're in. So I'll be picking up some applied material. Wait, yeah, applied materials. I was confusing that with what's that other stock? I don't remember. Google. I'm happy buying it like 150. I don't think I actually bought any of this. Maybe like 1 or 2 shares. But I think it'll get back to 150. They got earnings again soon too. Oh man, Intel is tough. I'm not really buying anymore, and I'm expecting to see more downward movement probably. Actually, I bought some MRK, some Merck. I don't know how to pronounce this. Is it Merck, or I think it's Merck. but their dividend's like 4% now. I started buying. Actually, let's go to 5-year time horizons. I think it's more appropriate. But I started buying like here. I don't love this company. Let's make that clear. But it just seems like a good value. And now they're like falling. Like look at that. Like drop like 40%. They're in the pharmaceutical space. Again, I don't know every single thing about this company, but just to gain some additional exposure. I mean, I have some of that in some J&J, but I don't know. It's probably not the best idea. Pan American Silver, I'm actually thinking about exiting once it hits $30. So we'd run this up from 21 to 30. It would be like 40% gain. So I mean that's okay. I'm not really looking to hang on to it much longer, unless, I mean, it could always go up to like $40. I don't know if I want to bank on that though. I think like 20. It's hard to say because like it's so depending on the gold and silver prices. Wait, that's insane. What? Gold is at 30, almost 3,400. It essentially just ripped up. In 90 days is up 25%. Does that really show the uncertainty in the demand? What? I don't... Guys, do you know how insane that is? I've not been tracking this. That's just like straight up. Since there's essentially been 2 downward months. This is like a consolidation month. This isn't even like a downward move. This has just been like straight up, and this is gold. This is like one of the biggest markets. That's wild. Silver isn't really doing too much, which that inverts the gold to silver ratio a lot. What is that? I don't remember actually. I might have it somewhere. What is that? That ETF, or maybe not ETF, but anyway, that's insane. Newmont is like popping off. I mean, Pan American Silver mostly deals, not mostly with silver, like a good percentage, but I'm interested to see the margins that they're earning with that gold price. If the silver price, I think Pan American Silver, I gotta actually look at this. It's been a minute. I'm pretty sure they have more allocation to silver, but they still are exposed to gold, and I think as well as copper, but I think, again, mostly silver. That is insane. Okay, moving on. I've been buying SCHD as it falls. I'm at $25 now at this, my average cost, so I'm like barely breaking even, but it doesn't really matter. I'm actually considering picking up like a share or two of UPS. I don't love the company, but the dividend's like 6.5%, and then again they might slash it. I've already been in a bunch of companies where they did slash it, but at the same time, it might be worth that risk. I've been picking up some more VYM, Vanguard High Dividend ETF. Just kind of some more exposure to the ETFs, and kind of along with my strategy with the dividend ETFs. I've been thinking about buying some more Exxon. I haven't bought it since COVID, but at $100, I think it's time. The yield will be about 4%. And I just think that's a good place to park the money for a little bit. If it falls to like anything below 100, pretty much fair game. I think I'm in. What if it goes to 70? What would it be? This would be 0.99. It's fine. 0.99 times 0.99 times 4 divided by 70. If for some reason it falls that low, the yield would be 5.65. If Exxon somehow falls to like 35%, I'd be a huge buyer in like this region. Kind of just based on the technicals. It's been, yeah, we've had a good run in this area. I think we could probably see some chopping around down here, especially if things get a little bit more like volatile and risky. The other day, Apple was up 15%. That's just wild to me. That fluctuation in market cap. is it VTI? No, Waste Management might be a stock I might pick up, but this thing barely even dropped. Barely even dropped. Oh, let's just raise a dividend to 825 cents a share. Let's see this. 0.825 times 4 divided by, let's say, 225, sure. And it's like 1.46%. It's like not a lot, but again, it's a pretty solid company. And I'm not gonna say it's recession proof, but it's definitely a lower beta stock, so that could be an option. I'm still tracking that. What's Amgen doing? I should not buy any more pharmaceuticals. I gotta be really careful. Actually, yeah, where did Snap-on go? It got removed from my watch list. I've been picking up some Snap-on. Oh man, it fell down to like 300. Just like kissed it. Pretty much buying this each month. As, yeah, again, I'm buying this the whole time, but I'm kind of hoping we see some prices down here. That'd be awesome. If it hits like 260, it was 214. I keep closing this thing, then I want to see it. But 2.14 times 4 divided by, let's say we get it for like 280, sure. 280 puts us at the 3% range, so that's wild to me. If this thing outperforms 15 more percent, but we're almost there. It is at like 8% to that price. But starting yield, but yeah, 280 puts us at like a 3% yield, and this company's just, I like it a lot. I'm not gonna overhype anything like this company, but it just seems pretty solid, healthy balance sheet. I like the space that they're in. I think they got some room to grow. It is expensive though right now, but definitely picking some of that up. If these ETFs do fall, like I think VTI is the one I'm watching. The only ETFs I have are VYM, which is a high yielding dividend ETF, and SCHD, which is like the same thing. They own different assets. They have different assets in the ETF, but the purpose is the same. I would like to have like a more SPY related ETF. So a thing like VTI, or is it VOO, something like that, right? It's like the same thing, just, yeah, I guess I'll put this on the watch. What's the difference? Total stock market ETF, and this one tracks the SPY more. Maybe VTI is more like the Dow. But I gotta look that up. But anyway, I want like something that tracks the overall market more closely. I mean, actually, VTI is down 15%. Like, that's kind of significant. I mean, we probably still have a long... Yeah, I mean, we could always go down farther, but I'm saying, I think it's getting to be a decent opportunity. I am kind of curious. VTI, the yield is 142. It's VOO. 141 is basically the same thing. And the thing like VYM, oh, the yield's 3%. Oh, that's attractive. Actually, where did it go? I was looking at this the other day. I think this is the highest VYM's dividend's been in a very long time. Dividend yield, if you want to track. Okay, I lied. It's a complete lie. Yeah, it's kind of expensive. But also this is during COVID, so we gotta keep track of that. And I don't have the 10 years. In the last 5 years, though, I think SCHD is quite nice. Again, it doesn't necessarily mean it's a great product, but it's also it's just something to consider. Actually, I think Realty as well. Look at like almost 6 or 5.5% yield. Still, I don't like this. I don't like the retail space that much. We own Simon Property. I'm pretty sure there's another like ETF though. I probably should. No. Why am I not thinking of this ETF? Anyway, I'll put that on close for now. Actually, I probably have it in the investing tab. What's Disney doing? Oh, Disney dropped. Disney's down about 30. 30% from the highs of this past 365 days. Visa would be a nice company to pick up too. I think the credit card space, that's not going anywhere. So just finding it at the right value, I think would be pretty good. I guess what is Visa right now? A 0.7% yield. That's just not worth it to me. I mean, again, they could grow the yield quite quickly and just everything like that, but at the same time, like, I think there's other opportunities out there. It's a MasterCard, same thing. JP Morgan. I'm still like, JP Morgan makes me mad because I wish I bought it. I think I was gonna buy it at $100. Where was it? Yeah, it's like right here. Same thing with Caterpillar. I was like, if it gets $200, I'll buy it. And it goes to like, actually 100. Like it touched it that day. Like I wasn't gonna get it, but it bounced off of that and it just kept going up. I mean, it is what it is. Like, but it's where like nowadays I'm like JP Morgan and Caterpillar kind of taught me like, hey, if you want something, don't wait till like it hits the exact price because you might not get there. Like, I wanted. Is this during COVID? Yeah. I guess it did get. Why did I wait so long here? I wanted it at $100 Caterpillar. Anyway, let's stop talking about that. There's no point. Caterpillar, I think I would like to own as well. But almost a 2% yield. I think they got a pretty good balance sheet too. The space they're in is good, but I mean during a recession that might get clobbered. What do you know? 3M is backed up to the price I bought it at when I sold it for so long. I just scan in some stocks real quick. What's Walmart doing? Walmart, McDonald's, okay. Anyway, though, I'm gonna be picking up some stocks here and there. I welcome the lower prices. I know people kind of get nervous, but like, if again, I know people are in different stages of their life, but for me, like lower stock prices right now are excellent because they pose some great buying opportunities to me to actually buy stocks that I think are of quality at like decent prices. So I'm excited. I think it hurts seeing red sometimes, but I think I'm not that I'm immune to it. But I think I just changed my perspective since the last time the market really dropped. And again, we might go down for a while, and maybe my change of heart, or I'll have a change of heart. But I think it's kind of important to have these conversations with myself as well, just to remind myself, like, hey, you're doing this for this reason, and it might not come to fruition, but at the same time, like that's part of the risk in, buying a stock. So you get to diversify your money, your income, or I guess more like investments, and just again understand the risk, because it might be good, it might be bad, but right now this is why I'm taking this risk. So, oh jeez. Anyway, though, I don't have too much else to chat about right now. Let me know down below, though, if you guys are buying some stonks. What are you buying? Why are you buying it? But yeah, take care, everybody. Stay safe out there. Be vigilant. And I'll talk to you guys real soon.